Hi there. Despite the recent decline in the stock price, I decided to buy more. Do you know why? Let me show you. In this video, you'll find out the reasons why I'm buying more of Alibaba. As you can see, their total revenue has increased by 9% in the last quarter, Q2, and the income from their operations was up 34%. That's a great improvement. If you look segment by segment, you can see that the highest growth came from Alibaba International, where they have their well-known websites such as AliExpress, Alibaba, Trendyol, and others. By the way, I'm also a customer, not only an investor, and the experience is quite good. I can't complain. And you can also see that the other segments are doing great. They are growing. For instance, Taobao and Tmall, they reported a growth rate of around 4%. For Cainiao Smart Logistics, they reported a nice growth rate of around 25%. And local services of around 16%. But as you can see, their cloud division is not growing that much. They reported a growth rate of around 2%. Plus, they also cancelled the spin-off for this segment, their Cloud Intelligence Group. However, they keep growing, and that's important. Moreover, as I said, their income from operations have improved by 44%. And maybe you know that the stock price depends on their earnings. If their earnings keep going up, the stock price will go up in the long term. In the short term, you might see some declines like this, down 10% in one day. The second good thing about this company is that their free cash flow has increased a lot. As you can see, in the last quarter they made over 6 billion in free cash flow. For the last 6 months, their free cash flow was around 11 billion. If they keep growing this way, then they might make over 20 billion in free cash flow. And at the current market cap of about 200 billion, the price to free cash flow will be around 10 or less than 10 if they make more than 20 billion. Don't forget that this is a growing business. They'll grow more in the future. So based on this valuation, the price to free cash flow, the stock price is quite cheap. And also based on their earnings. Another good thing about this company is that they keep doing buybacks. For the last 6 months, they used 4.6 billion for buybacks. That's amazing. Moreover, they still have a lot of cash on hand, of about 62 billion in cash. And that's great. Now the question is, what are they planning to do with so much money? First, they will keep investing in their business to grow even more and deliver higher free cash flow in the future. Second, they will continue to do buybacks, and they still have 14.6 billion remained for buybacks. And as you can see, the number of shares have decreased from 2.7 billion to 2.5 billion. And that's great because over the long term, the stock price will go up. If they keep doing buybacks when the stock price is cheap, your value will increase over time. And that's great. In addition to their buybacks program, they announced a dividend, $1 per share. At the current price, that will be a dividend of around 1.2%, or even higher if the stock price keeps going down. And that's amazing, because you can invest in this company at a lower price, and your return will be higher. As you can see, they are planning to pay for this year over around 2.5 billion in dividends. And the payment is expected to be next year, around January 11th. Be aware that you have to be a holder of the stock on December 21st. If you buy after, you won't get a dividend. So these are the main reasons why I invested more in this company. Of course, the first reason was an improvement in their operations. The earnings have rebounded, and also their free cash flow. And I bought more right after the decline in the stock price, after they reported the results. Now, if you want to know more about this business, their future plans, for instance, as you can see, their Alibaba Cainiao and AliExpress are starting to offer 5-day global delivery. First, they will start in key countries such as the UK, Spain, Netherlands, and then they will expand more. This is important because their Alibaba International segment will grow more in the future. This segment may become higher than their Taobao and Tmall. I don't know if their profits will be so high, but they have a lot of opportunities. Of course, there is also competition, but as you can see, their growth rate is amazing, over 50%. As you can see, their Sign Now segment continues to build a global network that can offer faster delivery. And this will be an advantage for Alibaba because they can sell items at low prices with fast delivery, and that will be a main advantage for Alibaba. As they are close to Chinese merchants, Alibaba is well positioned for future growth. So that's it for this video. If you want to know more about Alibaba, for instance their segments and their future growth, or if you want to know the fair value of Alibaba based on my scenarios, let me know in the comments and I will make a video only for that. And of course, if you have any questions, you can write them in the comments.